Greetings, members one and all of the Salivation Nation. Mined gold supply still not meeting demand. Let's explore! This is probably not too much of a surprise for many of us out there. We're seeing it as well with silver, but a lot of it is due to the increased interest in this metal due to the uncertain times for which we live. There's been a great demand. People are moving to the safety of gold. That's really what it's about. And as you know, there has been a lot of disruptions in the supply chains, and it looks like it's not been a very smooth transition out of the pandemic that we've seen from multiple different aspects here. We're going to get into a story here from mining.com, as was shared with me by a member of the community. But before we do, I want to encourage you to hit the notification bell and also maybe engage by gently rubbing that thumbs up button. And I want you to rub it first before you press into it, because I think if you just seduce that like button just a little bit, you know what, it'll feel really good when it just depresses in and it creates an explosion of euphoria and excitement into the engagement of the algorithm. So very much appreciated there. So here we go. Gold supply that is mined is still not keeping up with demand. From mining.com. 2020 was a mixed bag for gold producers. On the one hand, COVID-19 forced many to temporarily halt operations due to government-imposed lockdowns. Yet last year we saw gold hit a record $2,034 an ounce, but it was actually more than that. I saw it go over 2,050, mainly due to the pandemic-related demand shocks, including a sharp drop in the U.S. dollar, the flight from equities to bonds, which drove yields to record lows, thus supporting investments in gold, and monetary easing across the major central banks, comprising resumption of quantitative easing, which essentially has been mainly buying the bonds. And that's essentially where the real manipulation is in these bond markets, designed to drive down interest rates and spur borrowing. And interest rates cut to near zero also carried out to incent businesses and individuals to take out loans and therefore protect national economies from falling into recession during the once-in-a-century global health crisis. And it's interesting that they mentioned that, because they're also injecting a lot of it into some of these big banks. When people aren't taking out these loans, they're injecting it back into the stock market. And that's really what's pumping up and driving the stock market. And really, we've seen that to some level pretty much since the third round of quantitative easing and before. The stock market's been propped up, artificially inflated. And so it is somewhat risky. But I remember when I was talking to my my account holder from my previous job's IRA before I cashed it out into gold, I mentioned this to him, and he was like, well, you know what? Stock market over the long course of history has done well and has always recovered and will do it again. But really, we are in unprecedented times, and even we're back in that case, in that time period. Something that's been propped up means that the bubble is expanding. And an expansion of a bubble means that the membrane that holds the air inside of that bubble becomes under greater stress. How much stress can it take? I don't know. This is one reason why I stack gold, because that bubble will eventually pop, or at least deflate in a controlled manner through other manipulative techniques, such as a dollar reset. And when I talk about manipulation, there's where it's at. And of course, what the Federal Reserve is doing, what politicians are doing, those are the main drivers of manipulation. And that is an everything manipulative situation that we're looking at here. Moving ahead, with gold prices rising 22% in 2020, a pertinent question is whether the world can produce enough of the precious metal to meet rising demand, especially considering we are entering what could be a particularly ugly period of inflation. Rising prices of goods and services, which is really the definition of inflation, but you can also look at it as a devaluing currencies out there, especially the dollar, and the dollar is targeted by the Federal Reserve to lose at least 2% each year, and they know it's going to be more than that this year, and probably into the coming year. So here we can see the gold price over the course of the last few years here, and it really spiked up around the summer of last year, there around end of July, early August. Rising prices of goods and services are generally good for precious metals. Gold is the most proven investment to offer return greater than inflation. In fact, that's why I don't call it an investment. I look at it as a savings account. And so that is the one thing that is steadfast with gold, is it acts as an insurance policy against economic instability. Its rising price at least it's not a loss of purchasing power. Due to an increase in inflation every decade except the 1930s, the U.S. dollar has lost over 90% of its purchasing power since 1950, and over 97% of its purchasing power since 1913. Gold, on the other hand, has gone from $35 in 1970, which was the fixed price of gold, to $1,750 in 2021, a 50 times increase. So we're revisiting one of the favorite topics. What about this concept of peak gold? It's essentially, it refers to a point when gold production is no longer growing, as it has been by 1.8% a year for over 100 years. It reaches a peak, then declines. Peak gold doesn't necessarily mean gold production will suffer a major fall. However, it means the mining industry lacks the capacity to ramp up production to meet rising demand. Even higher prices would not make that happen because there aren't enough mines to tap for more supply. The idea of peak gold has always been controversial and continues to be. If the amount of reachable and economic gold resources is finite, presumably gold companies have a shelf life. It means gold mining is a sunset industry that will only see so many more bright orange spheres slipping over the horizon before the last ounce of gold is poured. And that means that gold essentially will become, in a sense, scarcer as that happens. And that's why there's been a lot of excitement in the mining sector, and some of these companies that I've profiled, they've done very well with their stocks. These discoveries that they're making and finding out there with some of these gold mining projects they're looking into for their potential to produce gold. If gold is indeed becoming scarcer, prices have only one way to go, and that's up, as long as demand for the precious metal is constant or growing. And that's just it. We are, I think, at a point now where we are seeing excitement into both gold and silver. And so therefore, I believe we will see the prices continue to climb. In this particular mining.com, they said they approved peak mine gold in a previous article. From recent numbers from World Gold Council show a continuing slide in mine gold supply compared to gold demand. It shows a 4% decline in total global supply in 2020 compared to 2019. Mine production also slid 4% to 3,401 tons, including just 896 tons in the fourth quarter. But again, with lockdowns occurring in Mexico, the second quarter 2020 production was 62% lower. South Africa, where production fell 59%, and Peru, which saw a 45% drop. In Papua New Guinea, mine production was slammed by suspension of Porgera, the country's second largest gold operation, following the government's decision not to renew its mining lease. So there we see these decreases, which are unnatural mainly because of the coronavirus. And so there it is. So here's where we can see peak gold has taken a step downwards here. Think about all this gold that has been mined since 2010 and 11. It's been pretty steady upwards for all of these years here. And in 2018, we're starting to see it kind of come back down slightly. But that's still a lot of gold, and the price is still going up. There's hunger for gold out there, especially in the East, India, and China. And calculating the true picture of gold demand versus supply, they don't count gold jewelry recycling. What we want to know, and what we all really care about, is whether the annual mine supply of gold meets annual demand for gold. It does not. So 2020's gold supply, including jewelry recycled, reached 4,633 tons. Total demand was 3,759 tons, the first year under 4,000 tons since 2009. No peak gold there, right? Demand is more than satisfied by supply, according to the statistics. But when we strip out jewelry recycling from the equation, 1,297 tons, we get an entirely different result. 3,759 tons of demand versus 3,401 tons of production leaves a deficit of 358 tons. This is significant because it's saying even though major gold miners are high grading their reserves, mining all the best gold and leaving out the rest, they still didn't manage to satisfy global demand for the precious metals, not even close. Only by recycling 1,297 tons of gold jewelry could demand be satisfied during 2020. But when you look at the nuance of this, it makes you wonder, okay, well, we did meet demand. In fact, we got a surplus with that recycled gold jewelry. How much more of it is out there that will be used in the following year, especially if gold prices go back up again? That's a lot of jewelry not on the market that was before to be able to surpass demand. Now, if prices go back up again, I think you will see an influx of more of that. But notwithstanding, I think the author is saying that we should not rely on jewelry for that very reason, especially in areas such as China and India, and especially India, where jewelry is valued greatly. But it's valued greatly here in the United States as well, and other places. But I know that it does tend to be a pretty steady stream. I know my LCS, they buy jewelry, so it is something. But it's significant because it's saying that even though major gold miners are high grading their reserves, mining all the best gold and leaving the rest, they still didn't manage to satisfy global demand for the precious metal. Only by recycling those tonnage will be able to be satisfied during 2020. Of course, 2020 also with people losing jobs and not sure about their income, that could have been another motivator that maybe would not have been seen. It'd be very interesting to see what recycled from gold jewelry would have been in previous years. So the easiest way to increase gold supply is just mine more. It's difficult to do, though, when a mine's reserves are getting low and the grades have fallen to the point where only the low-grade material is left to scoop up and process. Last year, production for the world's 8 largest gold producers fell 6.5% to 25 million ounces, owing to lower ore grades, asset sales, reduced mill throughput, and lower recoveries, according to Global Data, which is UK-based data analytics and consulting company. So there we can see gold production variables in this chart here from Global Data. From Goldfields, there it is, and other places, it's down all these percentage. Newmont, Barrick, and Anglo Gold suffered the worst production losses and collective output dropping to 13.7 million ounces in 2020 from 15 million ounces in 2019. And I think that's another reason why some of these newer companies like Newmont, or Newfound Gold rather, is so exciting to find other sources of mining out there, other mine fields, that tapping into those, doing some drill testing and seeing what's down there to find other new areas to mine gold. Major gold reserves have been in decline for the past decade. Last September, Mining Weekly reported that 16 of the world's 20 largest gold mining companies, including 3 mentioned above, where Kinross Gold, saw their mine lives reduced between 2010 and 2019. Kinross, for example, had just 9 years of production left compared to 24 in 2010. Only two of the gold companies analyzed by S&P Global Market Intelligence, Zijin Mining and Fresnillo, had more remaining years of production at the end of the period than at the start. So essentially, the cupboard is bare. Gold companies whose assets were depleting more often turned to competitors' portfolios to replace their reserves. In reality, mergers and acquisitions isn't really adding to the gold supply, it's just shifting the assets of one company balance sheet to another. You know, it is interesting to see how this is playing out. But again, I think really the true test for this is going to see how it comes after the after the pandemic is behind us, and see how it comes. So there is in a 2020 report, Wood Mackenzie found that to avoid a perpetual decline in mine gold, the industry must see a rise in the number of gold projects under development that have a good chance of becoming mines. And that's why there's this hunger for some of these new mining companies. There's 44 to be exact. WoodMac crunched the numbers and found that by 2025, the industry will need to commission 8 million ounces of projects, meaning an investment of about $37 billion over the next 5 years. Intuitively, that seems virtually impossible at nearly 9 projects a year. Considering there have been 278 deposits found between 1990 and 2019 containing 2.194 billion ounces of gold in reserves, resources, and past production, according to the S&P Global Market Intelligence annual analysis of major gold discoveries. But in the past 3 years, there have only been 3 major gold discoveries and just 25 in the past decade. The U.S.-based financial information and analytics firm states that project pipeline is increasing short of large, high-quality assets needed to replace aging major gold mines. S&P Global attributes the severe lack of discoveries in the past 10 years to companies focusing on advantage stage assets rather than searching for new discoveries. Moreover, the share of gold exploration budgets devoted to grassroots or greenfield exploration has been cut in half since the 90s. It's not confined to majors and mid-tiers. According to S&P Research, juniors are increasingly focused on expanding known deposits, while producers have increasingly focused on exploration at their existing operations. We know this from some of the companies that have been profiled on this channel, too. Getting granular, we find that of the 278 discoveries within the past quarter century, about half, containing just over 1 billion ounces, have yet to reach production. But we're getting there. A lot of these discoveries and the technology is coming along. So it'll be very interesting indeed to see how this plays out. None of the resource announcements made in 2019 met S&P's major discovery threshold, meaning that all of them have been previously explored. They include Luminous Gold, 2.4 million ounce Gran Bestia in Ecuador, a new zone of a deposit discovered in 1999, 4 million ounce Chulbatkan deposit found in 1980 and brought to a first resource by End Mining, and Nova Minerals' 2.5 million Estelle project in Alaska. But there are some other areas in Canada that we've talked about, and in the United States, Montana, and elsewhere where there has been some more discoveries and some potential in those areas. We'll see how it plays out. But this kind of goes into more in depth with your Newcrest and Harmony Gold's project here, facing delays, going to ongoing dispute within the Papua New Guinea government, which I think is one reason why Canada may be the area to watch. And even in the United States, we'll see where things go. But it is fascinating indeed to see how this is all playing out. There's a lot of more information in this article. I'll actually, since I didn't go through all of this, I'll post a link to it in the description below so you can check it out for yourself. But I think this bodes well for gold in the near term. If things do come around and we get into a moment of stability where the precious metals prices stabilize as well too, that may be a while. But I think this is a good reason to be bullish on gold in the midterm. In the near term, and this is why another reason why I've been focusing on gold for the past few years, and will continue to do so. It is a metal to be reckoned with. From the very first bullion coin ever produced um, solely for circulation as a bullion product from the South African government here, the Krugerrand, to the American Silver Eagle that came out in 1986. These these gold bars, coins, rounds, these things are certainly in great demand, and I believe that we're seeing more and more folks coming into the light and realizing, hey, gold is something to hold on to. It's a substantive material, an asset class that is second to none in terms of wealth preservation, packing a lot of value in a very, very small space. When you hold it in your hand, it's something of value. You can't say that for any other non-tangible asset out there for sure. Bitcoin has gone through the roof, no question about it. But the only thing that's backing it is the energy dissipated in its production, and that and speculation. How do you measure that energy? How do you measure that speculation? I don't know. With gold, you measure it in ounces. And again, I'm not saying that I'm against anybody having Bitcoin. I've held a little bit of it myself, or investing in it, or anything of that sort. In fact, the one thing on this channel I always propose is people to diversify their portfolio to prepare for anything that could come their way. For those people who diversified their portfolios in 2011 or 12 or whenever they first got into Bitcoin and have held them for all this time, they're sitting pretty, the same thing can be said by a lot of different things where you put your money. So it just depends, and anything can happen one way or the other. Be prepared for the worst and hope for the best, and that is what it's about. This channel will never be a fear-mongering channel. I'm going to stick to diversification and being prepared for what may come. Maybe bring to you the warning signs about the threat that we have to the dollar and its value, and its potential. But I also hope that we don't see a collapse or any kind of calamity. I wouldn't want that on anybody, to fall on anybody. So we must be prepared for things that could or may not happen. Although with every passing day, we see things that do tend to lean in the direction that we are in trouble economically. But we'll find out. But nonetheless, there you have it. There's my thoughts for the day, and about this article about mined gold supply not meeting demand. Let me know your thoughts in the comment section below. I would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.